Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 15th of October, 2025. US, Trump, China tensions keep a lid on the equities overnight, despite there being a few bits and pieces of good news, including bank earnings in the US. There was some relatively good news. Powell was actually relatively dovish as well, which is a bit of a departure from his normal, because he knows he's pretty much getting fired in May. So there's a drop in treasury yields and things. So things are getting down to the utmost petty. I think they're arguing about tariffs and bans on cooking oil, which is, as per usual with Trump, things border on the ridiculous. I must admit, when I read that this morning, I thought it was coking oil instead of like coking coal, and I had to squint my eyes and saw it was cooking oil because it literally was that ridiculous. We had a bit of a sell-off late yesterday in the futures. So when the ASX closed yesterday at 4 o'clock, something sort of came out. Commodities got hit, and you'll see in a chart I've got up there later on. But where we closed here yesterday would have been peak, around about or close to peak loss for the futures, the US futures. And the Dow's ended up a little bit on the day. The S&P and the NASDAQ are probably, I would say, 0.75% recovered. And obviously the Russell recovered as well. So that'll be on the back of those interest rates. Now, just remember, when bond yields are low, that's good for smaller businesses. The Russell 2000 is the small cap index. Low rates, good for Russell. He's not a person. It's an index of 2,000 small cap companies, mid cap companies. NASDAQ being tech, S&P 500 being broad, and the Dow is kind of irrelevant, but we just have it there anyway for those of you who are over 100 years old. Because it's not even weighted properly. They never change the stocks. It's a very strange index. So these guys here, the Nikkei, the Hang Seng, China, etc., would have seen that sort of peak weakness. So those technicals have turned. Interestingly, we're sort of back into neutral or sell in the technicals on the daily. It has been flipping back and forth. VIX has been slowly grinding higher. Well, not really slowly, I suppose, but we're definitely back above 20. That's usually a bit of an early warning sign, a little bit of smoke before you see the fire potentially. Chip stocks just gave back a fair bit last night. And I dare say because tensions between, that's going to hurt these chip makers if China and the US can't get it together. I don't know. I don't know a cooking oil company, so I don't know whether they're on the market map, but I'm sure they would have been down last night. JP Morgan, despite a pretty upbeat results overnight, was down a little bit. Just a typical sort of Jamie Dimon. He's always errs on the side of caution. He's always quite bearish. I quite like that from a banker. I don't want to be with a bank that can potentially blow up. So everyone sort of hacks on him for it, but I think he's been calling a recession every year for the last 6 years straight. You probably want, I think that's not necessarily a bad thing for a bank, but credit loss provisions weighed on their shares, but the investment banking fees and revived deal making, and obviously a lot of these guys are doing deals as well. JP Morgan would be at the forefront of those. So that should be good for maybe the likes of Macquarie, for instance, today. The general banking sector up. Wells Fargo, I think, reported as well last night, as well as who else was there? Johnson & Johnson outside the space. They were largely flat. Revenue beat expectations, but they're going to spin off their orthopedics unit. Oil prices fell amid trade war concerns. So bit of a mix overall. These defensive sectors obviously saw a bit of a bid tone. And then we sort of taken a little bit of a heat out of this sector, the chip sector. So that's a pretty big move, but there was nothing Nvidia specific that really stood out to me. I think it's just because it's at quite decent high levels. JP Morgan Chase income statement. asset wealth management and corporate will be the increases there, up 45% year on year, up 12% there. Commercial investment banking up 17%. So, net revenue was up quite nicely. And I think these guys are pretty high, they're high net margins. So consumer and community banking, 26%, but when they start making money in corporate and asset wealth management, and they're that tends to be where their investment banking and stuff is where they get their higher margins. CET ratio is fine. Average loans, deposits, etc. App Economy Insights and how they make money is a really handy resource for those of you who want to go and have a look at it. It's probably not a bad start for the earnings season overall, because we had Wells Fargo. I didn't see Goldman and Citi overnight. It wasn't really mentioned, so there's every chance that they've moved that a day. I did think that was a little bit early on the calendar. Sometimes they just go off the calendars that is set off what the previous quarters were, if the company doesn't update. So these calendars are always fluid, no matter where you get your data from. Bank of America, Morgan Stanley tomorrow. TSMC will be in our daytime on Thursday, obviously because it's out of Taiwan. I think Fed Powell speaks again, and there's a bunch of Fed speakers this week. They'll be largely, but we're still in government shutdown. It was a Columbus Day weekend for some government employees. It's like the world's longest weekend. They are going to potentially pay the military, which we're copping an absolute hiding for, considering Congress and senators are getting paid, and then they're the people risking their lives for their country aren't. So I think they have come to some form of agreement there to pay the military. So that surely there's something coming sometime soon. We're deep into. I mean, it might even be the third week tomorrow actually. And the last one was 34 days, and that was the longest one we've seen in 50 years. So, bank earnings not normally huge for the overall market. Next week we've got the likes of Tesla and stuff, so that's where we'll start to heat up and see if these AI and Mag 7 companies can justify these valuations, and it'll probably set the tone for the next 3 months. Because if they can justify them and they've got forward earnings growth, the bears will be disappointed again for probably about another 3 months. There was a good stat that I saw on socials the other day. When there's been a 34% rally from the bottom, which is what we've had since April. There's usually a 3 to 3.5, maybe 4% pullback at some stage, which realistically is a minute amount compared to the scale of the move. I would just probably be thinking, if we don't get any disasters in the Mag 7, which is that high concentration risk, means that and high weighting just means that those guys are the only ones that are going to move the needle. If we don't get any disappointing results, I wouldn't necessarily call a rally, but I dare say what will happen is we just don't get. Normally, the Christmas rally in November and December is because we're coming out of September and October weakness. We haven't got that September and October weakness, so I think we'll probably just be a little bit boring and sideways in that end of year, start of year period. So here's just I've just got silver. This is an hourly chart. So this is yesterday's day session here in that blue shade in the middle. So that red line there is when the ASX closed. So literally we closed, and then the bar chart or the candlestick chart there is silver. I believe the green one is gold and the blue one is copper. You can see as we shut, they got hit, and they're back to. Silver's not back to where it was. Gold's not back to where it was. Copper's probably slightly lower. So don't be, that's not, none of those price movements are going to be factored into where the ASX stocks closed yesterday. So we probably will see an exaggerated sell in some of those junior miners in silver, some of the gold miners and the copper miners as well. They did pretty well. Like silver at one stage, spot got to 55 yesterday. Those London lease rates were reported to be anywhere up to 90%. I've explained lease rates in the past, but That's 90% per annum, to secure silver that they're paying. Normally, that is you don't pay anything. And the 2011 rally in silver, which was I think it went from 2008 to 2011, but spiked and then got flushed. It was a flush high. The lease rates are only at 30% per annum, so they're actually flying physical silver to London because of the shortage. Gold did well to hold up, but we were much higher yesterday on the close in the ASX. Copper did well to pull back, but these things were like silver pulled back nearly 6% from its highs. Look, I think at this stage with silver, it's had, and gold and copper, they've had enormous runs. What I would say is just be taking small amounts off the table here. I think that's probably what we'll be looking at doing today, maybe as well in uranium. Lithium seems to be on fire, but uranium's just been on an absolute tear for the last few months. We're just going to take some money off the table there. But if we get a government, if the government shutdown ends, that's going to be good for the US dollar. It's going to be bad for gold, silver, copper, and platinum. So that's kind of the reasoning. We think the long-term rally will be fine, but overall, you just got to, it's been a good run, and there is if all of this US China trade stuff settles, those things are going to get whacked, and you're not going to have a chance to get out. So I would highly recommend, even if you just trim a quarter, bank some profits, if you're on those trades, and just be sensible and manage your risk, because that's the fastest $500 rally in gold in history. Obviously, it's relative, but and one of the biggest rallies in silver. We're up about 70 to 80% now in about a year. It's obviously it's pretty sensible. You don't want to go all in. You want to take some chips off the table as it goes and sort of rebalance a little bit. And if there is a government shutdown, if it is solved, it'll likely be around concessions in healthcare, and we've still got some decent. There's still some decent bargains out there in healthcare. Telix upped their guidance yesterday. Actually, all the haters on Twitter, and social media, and the analysts and stuff that basically retrofitted a new investment thesis because the share price fell. Thankfully, they've all just been proven wrong now, and everyone can just move on. Just be very careful when a stock gets hit, and then all of a sudden stuff comes out of the woodwork from analysts. They quite often will just find a reason for the move rather than it actually being the reason for the move. Clarity as well was one that I've focused on quite a bit. It looks to me like the short seller might have covered by now and taken a fairly big hit. Unlucky, mate. But yeah, I would probably suggest that. I mean, that was up 10% early yesterday and ended up down about 15. I dare say that covering's done now, and it'll probably drift a little bit lower, because at the end of the day, they're not not going to be getting any revenue for a couple of years yet, so it's not really it's not really going to happen. But overall, there's nothing really on the economic calendar. I would expect the SPI was up like 0.8%, because futures was down as well. So yeah, we're essentially we probably expect a bit of a bid tone, but maybe just not an overly eventful day overall. I think it's probably not a bad day to do a little bit of rebalancing with that, that VIX starting to spike a little bit higher, and the commodities taking a bit of a breather. So I don't think there's anything else. Yeah, I mean, geopolitical could go either way. Genuinely, I've got to say, I'm normally not short of an opinion, but at these levels, there's a fair bit that could happen that could significantly move this in any direction, particularly with Trump, in power. So, I'm a little bit risk off as it stands at the moment after, an extraordinary run, which has kept a grin on my face for about the last, 2 or 3 months, because I've been waiting for these precious metals and commodities rallies for about 2 years. So, but look, everyone, have a great day. If you ever want to get in contact, emails mark.gardner@mpcmarkets.com.au, or you can go to the website or hit me up on socials. But have a great day, everyone, and we'll chat again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.